Hey guys, what's going on? I'm Kelly Kellam. I'm joined here by Tshroom. We're basically behind the scenes at the Crypto Jebb team, and we're filling in today for Jebb, who's been a bit under the weather. Tim also healing. We've been doing a lot of stuff the last few months, just trying to pull so many things together for you, the community. So thank you so much for sticking with us. Thank you for all the members that have joined here on YouTube, all the subscribers, and we have so much that we want to share with you today. Catch you up on what's going on with the market and really what exactly is going on with the market. Are we still going to hit 100K by the end of the year? Is it going to be delayed? Is there other things going on? So we're just going to dive right into it. And Tshroom, how you doing today, brother?
I'm doing well. Happy to be here. Really grateful to be able to fill in and just kind of make this happen and keep the ball rolling.
Yeah. So thank you for joining me today. And also thank you so much for all the many hours of fun and laughter we have every morning putting together the coffee and crypto. So without any further ado, let's jump right in. Today, we're going to cover a number of different things. Well, we're going to just take a little bit of a pulse of the market, coin market cap. We're going to do some snapshots on Bitcoin and Ethereum. And the majority of the show, what we really wanted to focus on today was the discussion. What's going on with Bitcoin? What's going on with Ethereum? Are there things holding us back? Are there other underlying fundamentals that just aren't hitting, or what's really going on? So without any further ado, I'm going to share my screen here, and I'm going to jump right into a little bit of coin market cap. So here we are. And as you can see, one of the first things I want to mention before we really dive into this, whether it's Bitcoin, Ethereum, Cardano, XRP, so many people we've seen throughout the last few months, they might have one project and not the other, and they wonder why everything's running while the coin that they're holding isn't. Cardano is suspect in case here. And as you can see immediately on this rundown of coin market cap, the top 10, now everything's down. And what do we tell you? Now Cardano is the only thing that's running. So that's one of those first things I want to remind everybody. And I've said this over and over again, and so is Crypto Jebb and Tim and everybody on our stream. You've got to pick your horses. You got to pick your bets and stick with them, because things are going to run at different times. And that is the number one reason why it is the most important thing to have a diversified portfolio, because things will move at different times. But in the long run, all things will go up together. If one of them fails or has a huge 51% attack, which is going to be very unlikely, or just a hack on the chain, or just bad news that comes out, the rest of your portfolio really helps keep a very centered and healthy growth or a drop in over the course of the market cycle. So as you can see here, we got Bitcoin. It's down 4% over the last 7 days, only 3% in the last 24 hours. Ethereum's down 4%. Binance Coin, Tether, which always is going to be quite stable. Solana is getting a little bit of a bump. They've also had a pretty good week the last 7 days. Cardano finally is having some nice movement in the last 24 hours. XRP basically doing about what the rest of the top 10 is doing. Polkadot, it's actually had a pretty bad week, down 11%, down 4% in the last 24 hours. Dogecoin, Avalanche also had a fairly bad 24 hours. But at the end of the day, when we're seeing all these coins dropping, in relation to Bitcoin, Bitcoin is the leader of the pack. It's the horse. It is essentially the temperature of overarchingly where the market's going to go. So we're going to dive into this more deeply in a few minutes, but why? Like why, how, what's going on with Bitcoin that is basically being, in a way, an impediment to the growth that so many of us are expecting? Well, let's dive right in and let's take a look at Bitcoin and see what's going on. I'm gonna start with some market cipher on some larger timeframes, the 1 week and the 2 day, and then dive into some Lux Algo snapshots. So looking here at market cipher on the 1 week, I mean, you could see right away the money flow it's still quite healthy. We've been dropping the last couple weeks, but we're not going anywhere below any. You can see this line right here. This line I just drew, we still have plenty of room to go. And truth be told, in a bull market, even if we came all the way back down closer to the zero line, in strong, healthy bull markets, that the zero line almost acts as its own reversal zone to come back up. And we have so much headway to go there. Momentum, we have had a red dot. It's been coming down. RSIs are still coming down a bit, volumes coming down. All of this, I would say, especially what we're going to look at some on-chain metrics in a little bit, all this is to say that we're still in a very bullish setup. There's nothing that's in jeopardy here when we're zooming out. As we always say, when in doubt, zoom out. If we zoom in just a little bit here on a 2-day, we can see, let's turn off the charts, all the lines. We actually, the winds are starting to shift here. We have a green dot on the 2-day that came a couple candles ago. The money flow is starting to come back up. The RSI is still maintained in bullish control zone. It's very, very healthy. Now let's shift over directly to Lux Algo on Bitcoin. So here we are in the daily. Quite a few candles ago, we did push out of the reversal zone, came down. We found support here right in the EQ cloud. And this is very similar to what I was saying on Market Cipher, where the zero line still maintains basically very bullish support. When we're in the very healthy bullish movement, you find support at the zero line versus going below it on the weekly or the 2 or 3 day. Now, same thing with the Lux Algo. You find the EQ cloud on these, like for instance, the 2-day, the daily, even the 12-hour, the EQ cloud can actually act as the bullish reversal zone versus coming all the way down to this to the green reversal zone on Lux Algo. So we're pushing through, almost through it, but we're still within the EQ cloud here. The trend catcher is still red. We have our Lux oscillator down here is starting to, the wind is starting to shift here. It's converged now towards bullish. We're actually near a low, as you see through all these periods here. So things are starting to shift here. So now let's zoom in just a little bit more on the 4-hour. Give it a second to load. Okay, so now with this, we've bounced off the bullish reversal zone down here. Now we're finding support, resistance on the EQ cloud. We're still under a sell signal. So this just shows still a little bit of indecision in the market. And that goes completely in line with everything we're thinking about: how, what, where, when, why. How come we're not getting these massive candles like everybody's been waiting for, essentially for 3.5 years, coming into the end of this bull run? But I know Taylor Tshroom, you and I were talking earlier before the stream about everything going on with Bitcoin, and you had mentioned maybe, I guess, a week or so before Thanksgiving, something about the Thanksgiving Day effect, and essentially what's going on with that. So share a little bit about that. I'll jump out a screen share here, so I know you have something you want to share.
Yeah, absolutely. Yeah, let me just screen share really quick, and I will show you guys exactly kind of what I'm rocking with. Looks like we've got, it's a little tricky to get to. Okay, now we got it. And there's so many tabs. Okay, so I actually want to show you guys my Twitter, not the charts, because I just tweeted out a tweet that kind of encapsulates exactly what I'm trying to, kind of track with what is going on with the Thanksgiving effect. So what that is the BTC needs to jump 4.13% up to 58,987 to the November 25th candle close in order to keep the record of the Thanksgiving effect. And then I ask, do you think we're going to make it to there? And then here's the chart kind of explaining exactly what's meant by that. And you can see, we still have some ground to make up. But if you look down, I mean, we got as low as 53.80, and that's, we've recovered from that. So, we can easily make up that 4% today. And that would be really cool to keep up that Thanksgiving effect record. And for those of you who don't know what I'm talking about, I'll scroll down to where I kind of shout that out. So that originally the Thanksgiving effect is that the percentage change from November 5th to December 2nd each year has never been less than 3.68% higher for the last 6 years. So every year from November 25th, Thanksgiving, to December 2nd, the price of Bitcoin has only ever increased. And so that's pretty interesting. And here are the percentages. I went back and backdated, calculated, each time. Back in 2017, we were actually up 33%, worthy of note, and 2015 up 13% between those two timeframes. So, hopefully we'll be able to maintain that. If not, this would be the first year in 6 years that we did not maintain that growth between that very short span of 7 days.
No, that's excellent thoughts and historical back analysis, as well as trying to figure out. It's one of the arts of TA, and trying to figure out where your entries and exits are. And even if you're not doing trading and you're just looking at entries and exits or price movement for your own peace of mind, it's good to do these sorts of things. But this is a topic I want to bring back up in our discussion about some of my thoughts and theories, and I'm curious to what your thoughts are on that as well. But before we do that, let's just do. I'm going to jump right back in to Ethereum here. Let's get on Ethereum. Where you at, bad boy? All right, so here is Ethereum. We're just going to do a quick overview like we just did on Bitcoin, and then we're going to hop into our discussion. So as you can see on the weekly here, this is even healthier than Bitcoin. This has just been straight upward movement, climbing the mountains the whole way through. It's very slight pullback that's happened here, but I wouldn't even call this a pullback. This is just almost like a cooling off. We can't just go, just like if you throw a rock in the air, unless you're, Superman or something, the rock at some point, there's energy against that took it to go up, that energy will start to reduce over time, and it will plateau and then come down. Whether that's going to plateau and then, have somebody else at that level continue throwing it up. It's the same way with money flow. So this, here's us watering the garden with money coming into the market. It's been going up this whole way through, all the way from, what is this? January 2020. We've just had solid money flow here. And not only that, we have had a red dot on momentum on the weekly, but you can see here, the VWAP is starting very sharply to come back up, back towards the zero line. And if you really zoom in here, you can't tell from the colors, but the lighter shade here on the momentum is starting to curve around. The RSI is starting to turn back up. So this is all super positive. So let's look now on the 2-day here. So we have the DBSI is starting to increase on the bullish pressure, pushing up on the market for Ethereum. Now, if we zoom in here on Market Cipher, VWAP is just insanely pushing up sharply. We have a great green dot here on the momentum. Not only that, if you look at this, this is one thing people tend to leave out. If we take a trend line here, this is never going to be right on, but the trend is you have this anchor wave by trigger wave, trigger wave, trigger wave. This is essentially like pulling a slingshot and then pulling it a little further. This is just continued bullish pressure that is shifting the momentum towards our favor for the bulls. Not only that, you have money flow coming up, RSI super healthy coming up. It is getting a little hot here, but this is on the 2-day, so that we still have quite a bit of ways to go. Now let's zoom from here. Look at that crazy chart, right? Let's zoom from here and go into the Lux Algo on Ethereum, just to get a quick snapshot on that. Here on the daily, you can see, turn off the lines here. We've got same thing. It's very similar. It's mimicking a bit what Bitcoin does, as it normally does. It might divert a little bit here and there where it might move just before or just after. But in this case, we've found resistance here on the reversal zone. We've come down. This is a bullish market, and much like I said with Bitcoin, it's finding support on the EQ cloud. We've got a strong buy signal. We haven't had the trend catcher fire off yet, but if you look down here, you do have the Lux oscillator, which if you guys aren't seeing this on your Lux oscillator, this is one thing I will remind you of. Sometimes you need to go in, whether it be here on the Lux Algo or any indicator you have, delete it, and then bring it back onto the chart. Same thing with this. You can delete it, bring it back on. And what happens is a lot of times they will have updated whatever indicator they are. So you have to delete it and reload it so you get the newest settings. But as I was saying here, we have a strong buy signal. We're finding support on the EQ cloud. The Lux oscillator has flipped and is expanding bullish, which is super bullish. Not only that, similar to a Market Cipher, we are having an uptrend here with the Lux oscillation, how deep they're going, how, essentially expanding, growing bullish pressure. So all this is phenomenal. Let me turn back off the lines here. Let's dive into the 4-hour. Strong buy signal back on December 28th. Pushed through the EQ cloud. We found some resistance on the reversal zone. We do have a sell signal, but you see here, we still have a green buy on the trend catcher. So, and not only that, the sell signal only has purple candles. So this sell, I would actually discount to the value of it, because you still have the buy on the trend catcher. But you do have to take into account on the Lux oscillator, it has flipped bearish. And so this is essentially, to me, what this points out is there's a bit of a battle of direction, or thought of the underlying consensus of what the sentiment of what direction the market should go. So all the other underlying fundamentals that are in the market with the on-chain and things that we're going to show, that would be for me the tipping factor of which way you're picking. And we're going to dive right into that. So let me hop out here from the screen share, hop back into my show prep. And again, I just want to say thank you, everybody, for tuning in. I take a brief moment also to say, everybody, just give your love and prayers to our entire team, not only Jebb, but Tim and everybody. You guys, if you don't know, there's 16, 17, 18 people that work on staff with the Crypto Jebb team, McAfee Media. And we're 100% throttle all the time, going. So it's understandable here and there where there might be some time that somebody's under the weather, or somebody just needs a little bit of rest to make sure that we can bring you the best every day, with as much positive and positively influencing and healthy content that we can to help keep you informed. So with that, all that being said, let's jump in right before our discussion just to a couple bit of on-chain data to inform some of us about the fundamentals that we're talking about here. So first thing I want to share here, just as for me, this is a good general overview of the market fundamentals. I love this MVRV score. Essentially, with all the on-chain data, you can see this purple line every time it peaks. This takes into a lot of different. You can see exactly what it takes in right here. It divides the market cap by the real with minus the realized cap divided by all this data essentially, and it gives you a score, and it's basically on-chain temperature check of what's going on with the market. Every time we've become super overheated here, you can see this is a Bitcoin chart in the background, the price. Every time this peaks, it also, you see a sharp decline in price action. Peak, this is a 2017, 2018 bull cycle, sharp decline into bear market until this is the MVRV score. Once we bottom out into the green, it shows a bit of a bottom. We have upward price action. But same thing as I showed on the market cipher in Lux Algo, you can kind of start seeing trend lines. You see this bottomed out, but we're having a trend line also that's coming up here. So in a way, this is a new bottom. 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 So we have so much headway to go before we top out. The next thing I want to show, this is going to be super brief, but I did this tweet on my Twitter. You can follow me here if you want. I post daily with all kinds of the on-chain metrics and fundamentals that we use here on Crypto Jebb.
Excellent content. If I may say, you won't regret following Kelly.
Thank you so much, brother. But this is the number one thing I can reference is this on-chain exchange flow. This is basically money coming into market, into exchanges. This is money coming out for Bitcoin, Ethereum, Tether. These two are the primary ones I focus on, because when you start seeing the inflow onto an exchange start far outweighing or very exponentially increasing versus the outflow, what happens on exchanges? On exchanges, people have the money in wallets they've been storing, they've been staking, they've been yield farming, they've whatever, cold storage, whatever it is. When it's not on an exchange, other than doing peer-to-peer sales, that means that people are expecting that they're not going to need to offload their stuff to prepare for a bear market. So being that we still have the majority by $400 million, still outweighing on Bitcoin coming off exchange, that means people are still, they're not foreseeing, the large majority of the market, the big money is not foreseeing that a sharp decrease is coming anytime soon, because they're still pulling money. They're not setting themselves up to exit. Same thing with Ethereum. Now this next one, just briefly, This is the Rupal relative unrealized profit. If you see here, you follow this orange trend line, this is a Rupal. And once this kind of reaches its bottom, what happens when it reaches its bottom? You start seeing it curve. We have a huge exponential increase in price action on Bitcoin. Well, same thing with the trend lines on the other indicators I've shown you, and then also on the MDRV. This is also starting to show a trend line, a bullish trend line here. It's speculative because I'm not having more than 2 points, but this is curving quite conclusively, and I truly believe that we're starting to find a bottom in the price action that we're at, and that is just further exemplified. This is a Puel multiple, very similar. That is supported by looking at this chart here that I've retweeted from TechDev. TechDev _52, phenomenal chartist. But you can see this is a 2021 weekly. This is a 1970 gold monthly. And this is some of the ways you also find correlative markets and try to find fractal price action patterns. And when something's not just one touch point, but there's 3, 4, 5 patterns, it's not going to give you an exact map, but it's going to give you a general direction that we will at least rhyme with in some regards. And you can see here, very similar price action with the 1970s gold monthly. We have this peak, distribution, back test, rejection, and then it went to find the 1.618 fib, 3.618 4. And this doesn't mean we're going to get all the way up to the 3, 4. It doesn't mean we're going to, but the pattern, direction, and angle of movement, we are going to start following that in some regards. So it's important to follow some of those things. I had another chart here. I must not have shared it. I think it was this one here. Yeah. So same thing. And this is the most important because it's going to give us the nugget of topic that we're really going to dive into in the discussion. If you look back at the 2011 bull cycle all the way into 2014, we have a pattern that we followed that once we broke the 1.618, we basically met it, fell back, broke through it, found our peak, came down. Our next bottom was at the top of this peak, came up, broke the 1.618, actually met resistance, crashed a bit or corrected, broke through it. And then at the next, we came down. So we're doing the same thing, 1.618. We found it, same as here, and we've retested it, same as here. But what do you notice about this? Between this one and this one, what's the difference? The time here. And so essentially from that, I want you to understand, I want you to mull over, and I want to hear your thoughts on this as well, Tshroom. Diving into this discussion, the biggest thing that I see that I think all of us are forgetting is we saw how quick in a snapshot, a lot of people dove in this market in the last cycle and made so much money. But the number one thing that I want everybody to remember and really consider is the monetary force, which is essentially energy. Money is a store of energy, whether it's trading off of how much time it took for labor to create this tradable asset that then you trade for fiat currency, or in this case, Bitcoin, but it's energy. So with the market, the Bitcoin market, the crypto market as a whole, there's so much more, exponentially more energy in this market now because the price action is a lot higher. Therefore, it takes a heck of a lot more energy to move this market. And thus, just like a cruise ship, and I stated it in my Twitter, to start a cruise ship moving or to turn it or to slow it down, there's a lot more energy. And in this case, the energy is not only money coming in, but also the time involved. So I really see this and this is where I wanted to bring up your Thanksgiving Day analogy, looking historically. We're looking for December 2nd. We want it by close of business today. It might be the case that if we don't hit it, that Thanksgiving Day in effect is not the case. But I would suggest, I still think it is the case, because when we look at the direct dates on past markets, those dates are starting to shift and extend a little bit forward and more because there's way more monetary energy needed. So I'm just curious your thoughts on that and what's going on with the market and maybe some other factors that are slowing down us getting our immediate, we need it now bull run. What are your thoughts, Tshroom?
Yeah, well, I appreciate it, Kelly. That's an excellent analogy with the cruise ship. I think it's very apt because we are so much bigger now. Just the market cap of Bitcoin and other cryptos, it's a bigger ship to steer. You know, we're not just a little tugboat out there that can nimbly, switch
Tugboat.
around.
Yeah.
So it's a whole nother animal at this point. But yeah, I think you're right. I think also that um, there wasn't a good fundamental story quite yet. I think that there have been an excellent technical setup. You know, as we saw Bitcoin's price bounce off that multi-month support line, and it did. You know, we were waiting for it when it was reaching those new highs. I was thinking to myself, it's got to come back and touch that support though, and
Mm.
sure enough, it did. And it's taken some time down there. And I think that you're right. I think that every phenomenon that we've seen that has been historically repeated has now it's starting to extend out, and it takes a fractionally longer to actually come to fruition, and these patterns take a little bit longer. While on the micro chart, it's actually interesting because I would argue, like on the smaller chart and time frames in the hour and the 4 hour, things happen still happen faster than in the stock market or the commodities or forex markets. It's very interesting because there's still just a lot of FOMO, a lot of greed, fear at those lower time frames. But at the higher time frames, I think we are starting to observe that the phenomenons are stretching out because it's more of a cruise ship that we're trying to move that takes a lot longer
Yeah.
to steer around versus just an agile and nimble little speedboat that Bitcoin has been up until now.
Yeah, and you bring up an excellent point too, that whether or not we want to, we really hope that these markets aren't correlated. We want Bitcoin to, and at some point, I think it will truly become a hedge against, inflation, not only inflation, but a hedge against the traditional markets as a whole. But the thing that I'm also noticing, and this ties directly into the huge amount of monetary energy and time energy that's involved with the Bitcoin market now. There's something there. I mean, there's innumerable different things that are on the landscape now that are in the ecosystem and the environment of Bitcoin and crypto as a whole. Because in 2017, for instance, or 2011, it was Bitcoin into 2014. 2017, it was Ethereum, but it was primarily Bitcoin. And then towards the middle of the bull run, going in through, going on, we had, anyway, it was Bitcoin, Litecoin, and Ethereum. And then all of a sudden it was 3,000 other IPOs and coin offerings and all. I mean, it was just like a gold rush and everything was running, and you could have been the worst trader on the planet. All you had to do was buy a coin and not trade it, and you would have made 1,000x%, but the difference now, there's a bit more maturity in the market. There's a decade, which is still minuscule in the scope of broader markets. But the more speculative institutional investors now have come in, and we are people that are super bold or really believe in it. But there, it's still, I would argue, probably under 0.25% of all institutional investors out there are involved. However, there are, we've gone from being a $200 billion Bitcoin market to being over $1 trillion. We've gone from being under $1 trillion or under a few hundred billion total market cap for crypto to being a couple trillion, likely pushing up to the, 4 to 6 trillion this cycle, if things still push forward on like we all expect them to. And I should say, with all this institutional money that's come in, big money players, more, whether it's big money or not, very experienced traders, that in a way, I feel like outweighs the amount of the retail investment that's come in, that's really propped up fed into this bull cycle. And with that being said, having a lot more traditional smart money and big money that's in the market, knowing that this market is a lot easier to make money on in the sense of, I don't want to call it manipulation, but because at the end of the day, we're all in this market to make money. So I don't want to fault anybody for that, but we have to be aware when, and this is a consistent thing I've seen more and more this cycle than I saw last cycle, which is we'll see a pattern, and whether it's a ascending wedge or a descending wedge or symmetrical triangle, or recently we had this potential diamond top pattern that was forming. Almost every time what I've seen the market do, and this lends back to the smart money that knows how to work the system to make the most, is they know there's a lot of people, new traders that have come to the market retail that also have technology like the internet to figure out how to make the most out of their money. So, somebody coming in 3 months and they know more about trading than years ago somebody would have for years, because they're taking online trading courses like we have here, Crypto Jebb, CT2A, or just going on Bukowski, Trading Pat, whatever it is. And so they can see what the sentiment's going to be based on historical. This is going to break 70% of the time to the north, up. They know there's going to be a lot of people thinking that, and they see on the open interest on markets, they see where the money's betting, and they push it just far enough that way for people to really get in and believe that. And then they drop it completely the opposite way, shake everybody out, and then go back the opposite direction that it was going to go. So it really, really, for anybody that is trading leverage or even trading spot, I would say, because of that, you've got to be really, really, when you do your trades, have your stop losses, have your exit, your take profits, because this market is doing everything it can to shake people out. And I think this is large in part from all this big money coming in. And as this grows, I think that will lessen over time as the market becomes even bigger ship to move, because it's not going to take, a hedge fund to push it one way. It'll take 10 hedge funds to do it. So, but what are your thoughts on that, and maybe some other factors that are moving this market or holding it back?
Yeah, definitely. So it seems like, we're seeing the patterns kind of elongate, right? So things are taking a little bit longer patterns to come to fruition. And that's due to just the bigger weight, the more energy that's now in Bitcoin. And, we talked a little bit about that. And now I'm hearing, the composite man is kind of resonating back into, and
shout out to Tim, Tim.
Exactly. And hashtag manipulation is kind of becoming more and more of a reality as bigger whales, kind of see opportunities to play the games that they know how to play so well from the stock market. And then, as we said, we're also seeing a ton of positive movement in the on-chain metrics, which is encouraging. And Kelly showed us that, how the money has not stopped flowing in to Bitcoin. It's still coming in strong. So when I hear all of those different stories, and what I'm coming to the conclusion of is, I might not buy today or tomorrow or the day of the next day, but I'm definitely not selling, because although we haven't seen a really, energized bounce off of this multi-month support line, we're also not seeing it break down. And that is excellent. That puts a smile on my face every time I wake up and I check the charts and I see, oh, we didn't break down that support. It's just another day I get to exercise being patient. And, it just puts a smile on my face, and it gets me motivated to go make that coffee and take a sip. So that's what I'm going to do now. But, Kelly, I think that we've painted a really good portrait for people to continue to have faith and believe and see that the potential is there for Bitcoin going into December and even going into Q1 of 2022. So the only other thing that I would say, just to zoom down back into this, and I'll actually share my screen, and it'll take me a little bit. I'm not as quick. Neither of us are anywhere near as quick as Jebb with moving in and out of these charts. I don't know.
We threw this stream together, and in the matter of an hour, trying to make sure that we could get content out for this wonderful Jebbite community. But we wanted to make sure we got some content out since we've been a little MIA the last few days. We're still working here, guys. We're still trying to get you the content. So bear with us as we step into this supporting role.
Yeah. So here's kind of what I want to point out. And this, again, just kind of sticks with the theme of patience, being patient, right? So this is the multi-level support line that's really, really strong, and everybody's taken a look at. And this is what I was saying when we were up here hitting this new high. I was thinking to myself, looking back down at the support line, we're going to go back down to 53. And sure enough, we did. And if I had been savvy enough to take a short position, I would have made a little bit of money. But what I want to point out here is the times that we've come down and tapped this line, the first time we did it quickly, right? There's 2 day. This is a daily chart. There's 2 bars. It really didn't spend much time down here at this support line. But when we came down here, this wick down, and you'd be able to see it actually touched the support line probably on the 15 or 5 minute chart. But the main point that I want to point out here is how long we hung out down here at the support line before rocketing upward. And we spent 10 days down here. So we are currently, if you think about it in the same way, we're currently only at day 7 here as we kind of hang out down back here, kind of just chilling back at the, you almost think about it like you're at the gift shop or like the bar at a ski slope, right? It's comfortable. You've been skiing all day, maybe skiing, all weekend. You want to just go hang out back at the bar and just kind of, put a couple back with your friends, eat some nachos and just hang out. And there's nothing wrong with that, right? What would be wrong is if you leave the ski park or you break down at that support level and then, you have to reevaluate. But I feel so comfortable. We're just kind of hanging out in this ski lodge and we're gearing back up to go back and hit the slopes, and that's the way that I see it. And hopefully that's a fun analogy. The cruise lines and slopes analogies today is hopefully making everybody very comfortable.
Yeah, no, I mean, you couldn't have nailed it better. And the only other thing that I'll mention, because, there's so much that we could really dive into, and I think we'll leave it. We'll be wrapping up here in a few minutes. But is that the trader with the least experience trades on price. Okay, so the price it sounds bizarre, but the price is the last thing you look at to determine if you should buy or not. You don't buy because it's going up. You're like, it's going up, I'm going to catch it further, or whatever that is. But the thing you want to take steps backwards. You want to, okay, what's price? Okay, well then other than price, what's the on-chain metrics? Okay, on-chain metrics. Other than that, if you're trying to pick projects, where are the developers migrating to? Because developers have a really good understanding of what projects are going to do and what they're excited about. So, and where the money's being invested to build out certain projects. But so same thing with Bitcoin and Ethereum. Look at price in terms of how the price patterns are playing out on the chart, so you can get at least a general understanding of the potentialities of which direction something may go. But understand that you have something at the forefront that's available to you. And I would really encourage anybody out there. Number one thing you can do is invest in yourself, and the energy that you can spend learning at least the basics of how to read on-chain data. I'm going to share one last thing on my screen because this just came up in my mind. Is even if it's something as simple as checking out this ColinTalksCrypto.com CBBI. This is a Bitcoin bull run index, and this is almost like a cheater's guide to on-chain metrics. But you can check in with this. This has, I think, 11 or 12 different on-chain metrics that this CBBI basically indexes and shows. Like same thing here, that's similar to the MVRV. Peak in CBI confidence, drop in price. Peak in confidence, drop in price. We're nowhere near. We have so much room to go. And then if you want to look into the charts that are within this, you can click on any of them, and then you can check out these other on-chain metrics. And as you look at them more, you start to understand that essentially all the big money, the hedge funds, the smart money, they have a window beyond the price action and patterns into sentiment of the market. They have, I'm talking like incredibly genius technical analysts and on-chain analysts where they can see moves, and you can too. It's at your forefront. And check in with us here at Crypto Jebb daily. We try to give as much on-chain metrics as well, because the on-chain metrics will then inform the price action, usually is the best leading indicator that you can have, versus always looking at indicators that are giving you some incentive about what direction stuff is going. But there's a lot of stuff that's lagging within those. I will say though, separate from that though, out of every indicator, because I've been trading for 5-6 years now, the best indicator that I found in this whole thing, which in itself is an index, is if you guys haven't yet, check in with Lux Algo. Phenomenal indicator package. We have links down below if you're interested in it. Everything from the Lux oscillator to the the reversal zones, the trend capture, all that sort of stuff. And if that's not really your bag, we also have links down below from, I also have been using Market Cipher for a couple of years and find that phenomenal. And using those in confluence with each other to reverse check each other and get confluence with directions and really honest, sentiment about what's going on between all the indicators, because never use one indicator, find a confluence of a bunch of them. But With that being said, there's so much more we could share. I could talk for another 3 hours. Taylor, do you have anything else you wanted to sort of discuss here? Any last questions or last things you want to leave the audience with?
No, I think honestly, we've left it all out on the field here today, folks. I think that, you can go back and rewatch some of the notes that we've hit on. We hit on chain, and Kelly shared just now a couple of awesome tools. Whenever Kelly shares a tool, I use Mac, so I'm able to go up to the address bar of the tool he shows me, and you can actually drag that link onto your desktop, and then you have that link at your disposal. And what I actually do is I put a bunch of links in a folder, and then you can just click and drag and highlight all those links at one time, double click, and they will all open up on your browser. If I don't know if it will work for anything but Chrome, because that's what I use, but my hunch is that it will. Maybe on Safari or something like that. But definitely take note of all the tools that Kelly has just shouted out. I love to check them out and use them consistently. Another big one is the Fear and Greed Index.
Fear and Greed's great.
And what's the link for that? What's the
Well, if you go on CBBI,
it's on the same website.
I think. Let me see. They might have. I think they removed it. It used to be part of. That. I'll find what the. It's in one of my other computer.
It's on alternative.me. Yeah. So alternative.me, and Fear and Greed Index. These are just tools. So, but the cool thing is you can line up a bunch of tools and to develop an actual strategy that you stick to rigidly. Someone who's been trading for 20 to 30 years usually has, if they're still in trading, they've developed a pattern where they don't trade outside of that pattern unless it's something very obvious, like an Elon tweet or something like that, right? But even then, they won't trade with the same amount, the same proportion of their portfolio as they would inside of that rigid, structure that they trust and they believe in. Kelly, I think you've done a great job. Obviously,
You too, brother.
if you're watching, you have a newfound appreciation yet again for how good Jebb is at this, and that's why you watch this channel. And if you've made it this far, thank you so much for watching. So, Kelly, back to you.
Thank you also, Tshroom, working with me every morning, doing the show prep, all the research that we put in for Coffee and Crypto. And thank you, everybody, the whole Crypto Jebb community. You can follow Tshroom. I think his link, if it's not, we will put it in, is in the description below for Twitter. My Twitter is in the link below as well. And I actually, this evening, every Thursday, I do a show on Twitter Spaces called Crypto Answered. So you're welcome to join me there. It's free, 8 p.m. I got a couple great guests on there. We're gonna be talking about a lot of the same stuff. But other than that, everybody, thank you so much for joining us. Without any further ado, we just want to thank each and every single one of you. Have a wonderful day.
Oh, I got a real good feeling.